Hi, I'm Phil Baker, President and CEO of Hecla Mining Company. Thanks for joining me to review our second quarter results. Before I talk about the quarter, let me put things in perspective. Over the past 5 years, we've had remarkable numbers. 27% growth in revenue, 79% growth in silver reserves, $750 million of free cash flow from our 3 mines, and 37% growth in production. And over the next 3 years, we're expecting 40% growth in production, with close to 20% growth just this year. So more growth, and growth that's faster than a period, that last 5-year period, that we had good absolute and relative share performance. Now, it was a good second quarter with the first half silver production more than 1 million ounces more than what we did a year ago. For the quarter, Lucky Friday produced 1.3 million ounces. 4 out of the last 5 quarters were over 1.2 million ounces. That makes the mine roughly a 5 million ounce producer and close to being the 30th largest silver mine in the world. Just to put it in a context, in 2021, Lucky Friday was producing 40% less than what it's doing now. So far, free cash flow is $34 million, which is also a big change from 2021. And of course, all of this performance for the whole company was underpinned by Greens Creek's consistent 2.4 million ounces of production and $73 million of free cash flow. Our all-injury frequency rate was the lowest in the history of the company at 1.18, an accomplishment that reflects our focus on changing behavior and engineering out risk. The best example of engineering out the risk is the UCB mining method, which has miners in places that are safer, doing safer tasks. Lucky Friday AISC is a remarkable 0.5. Silver revenues are also growing relative to gold. We're almost 45% silver for the quarter, and I think we'll likely be more than 55% of our revenues for silver by the end of the year. And the silver operations have had good cash flow generation with $107 million. And if prices strengthen a little bit, the second half should be even better. Let me focus in on 2 of our properties where changes are happening. At Keno Hill, we expect full production in the 4th quarter. We restarted the mill in the 2nd quarter using lower grade stockpile ore for the startup, but we're starting to mine remarkably high grade ore. The mill produced 184,000 ounces in the quarter while operating with a temporary portable crusher. The next milestone in the mill is the completion of the crusher improvements, which we anticipate in the 3rd quarter. We expect to produce more than 2.5 million ounces at Keno at an all-in sustaining cost of between $12.25 and $14.75. As we indicated for the last year and a half, Casa has been impacted more than any of our other sites by inflation, causing the underground mining costs per ton to double. Underground grades have declined as expected. Tailings construction costs are higher, requiring more buttressing. So while we are permitting the higher grade pits, we are moving quickly to mine only the 160 pit, which will start next year. The way to think about Casa is in 3 phases. Over the next 4 years, we mine the remaining permitted reserves, primarily from the surface, generating positive cash flow. Then we invest while completing the permitting of the high grade pits in the infrastructure, equipment, and stripping in order to expose the first ore. And that first ore is expected in 2030. Positive free cash flow generation follows quickly and then builds over the coming years. Finally, I want to emphasize the critical role silver plays in the transition to renewable energy. Silver demand in photovoltaics was about 140 million ounces in 2022. That's about 12% of total silver demand. In 2023, TOPCon and HJT solar cell technologies are expected to account for 80% of the new photovoltaic manufacturing facilities. And these 2 technologies use 30% to 120% more silver than the currently widely used PERC technology. Silver demand for solar is set to grow further as the transition to clean energy accelerates. I would not be surprised at even a 30 or 40% increase in demand in silver for solar this year, or maybe next, making solar more than 15% of total silver demand. And if the economy slows, I'm confident, given the commitment made to renewable energy, that growth of silver and solar will continue. it seems inevitable that solar will swamp other silver domain categories, with maybe the exception of investment demand. Thanks for listening.